All right. A new year, first week of trading. We're back into the trade breakdowns. I miss those because these are my favorites because at the same time, it allows me to kind of journal what I did and my actual thought process. And I just enjoy it, to be honest. So, today we will not go into hindsight because we have multiple things to talk about, and I want to make sure that we don't miss anything so you guys can understand my whole thought process. Okay? When it comes to trading, I think you guys realize when we did a trade-a-thon is that there's not really any kind of certitude of what price will do. All right. And this is why I always say you need to react to the price and not predict it, right? Your goal is to make the best out of every single session. What makes a good trader is a trader that is able to make money even when there's bad price action. And I think we've displayed this and showcased this pretty well last week during the live sessions. Now our goal is to start growing to this type of trader so you guys can start actually trading a little bit more like me. Okay, you can see that in some cases price is shorting. I'm taking a short from here, I get break even, I can re-enter sometimes if the idea is still good. Then I switch my thought process and then I enter buys, right? When I do this is because I'm trying to actually cover the whole board of opportunities, right? It's okay to take losses. Today I didn't take any losses, but I mean, it's okay to take losses. But this is, I think, a really important message that I need to explain is some of you talk about losses like if it's at the end of the world. Like, let's say I would have tried to enter here, right? When price comes back and I had to do, let's say, my breakfast and I didn't have the opportunity to just break even. I would take the loss and just move to another pair and wait for another setup. I think some of you has like kind of PTSD to every kind of stop losses that just goes into shit because you constantly overtrade, over risk, afterwards revenge trade. I think this is a little bit more of a psychology condition that we should be looking together in the future. Okay. But let's purely talk about mechanics when it comes to the strategy. Usually when you take a stop loss, let's say like a stop loss that really made sense. Remember during the trade-a-thon last week, the USD CAD, we were ready to take that stop loss and we didn't got stopped out. We didn't. We had the opportunity to move to break even and then we had a re-entry on USD CAD and it did a 1 to 11. But remember when I said you cannot feel bad about hitting a break even on that trade because everything is there. The trade had everything, every single check marks to enter. Okay, so let's quit the little doctor talk and let's go to the thick of it. Nasdaq, it's growing on me. I cannot explain how simple this. I'm gonna say pair, even though it's not a pair, but you guys understand what I mean. What this pair is. It's actually so simple that it's so clear that you just cannot find any like something bad about it. I don't know how to say it. It's just we've seen it during a live session. It just basically a Nasdaq is kind of the spare tire in a car. If the pairs don't provide any solid trades, like let's say AUDUSD, like the fulfillment was okay. And we had that RF boss and it continued higher. But imagine you didn't take this. Nasdaq is always there to help you with the market open, okay? Around 9:30 a.m. So let's look at what we had on NASDAQ. So let's remove all that crap from the last call. As you can see now, it's pretty clear that we have downwards structural expectation, right? Price is clearly in a downtrend. So again, let me just remind you what structural expectation is. Structural expectation is the retail leg that retailers expect to continue in a direction. So when you have a structural expectation, you remove the liquidity behind that analysis. Structural expectation is purely retail mentality, okay? So if you have downwards price action, then don't be surprised if price doesn't reverse when it takes irrelevant liquidity, okay? I said it, irrelevant. When it comes down to actually understanding what will happen, if we are to suspect or maybe we have clear evidence of a potential reversal, now we add the liquidity in it. So price starts, we have one of the biggest push of the day is this breakout here. Very, very clear. No need to overcomplicate it. Really simple, straight down. Asia high, Asia low, enticement, clear liquidity. A lot of people would put it here. You can. For me, I put the stop loss as a visual representation for you. For me, when price will hit this zone and react like this, then I will update if there's stop losses here. I treat liquidity like a trader when it happens. I don't predict it. I don't overcomplicate my markups. My markups are so mature now that I just simply react to what price does, okay? So let's put it here as a visual representation for this video. Price pushes lower, straight. What do we need to do when there's an enticement / inducement of Asia? We look to the left. So we don't have anything to the left. So that's pretty good. We do have, though, false reaction of equal lows, right? So that would be our FR. And this is what we will discuss soon in the Tradeaways Volume 2. The FRs are also considered Tradeaways. Let's not focus on that. And this is how you do your markups. You see, you have this push, you have a false reaction. This is labeled as a trade away. Then now you come back, you can see that we have that false breaker structure that I didn't identify. And you have the SMT. See how each clues actually helps you solidifying your actual markup. So as you can see, we have IF boss here. IF boss. IF boss. Pretty simple, right? Now we have an SMT reaction. And as you can see, it comes back into the, I'm not going to tell you what this is, but this is a FR POI, or I'm not going to spoil it, but you go into the liquidity that has been built and engineered perfectly, okay? And if you noted that like this would be the whole inducement POI. So it's pretty straightforward, but I'll explain this in POI Volume 2. A lot of exciting stuff about to come. I hope you guys are ready. You better be cleansing your brains because I'm about to fill them with a lot of information. Now we have pushing low, pretty straightforward. We confirm that we don't have any relevant liquidity to the left. So structural expectations are very clear. There's a major push. People are selling. Perfect, right? Price makes kind of that new high here, okay? So we know for a fact that for this is a relevant high. This would be the first structural shift. So most likely no liquidity here, right? And we're not going to play smartass because we know what happened in hindsight, but we need to justify it. If we have it in hindsight, it's perfect. It's better to practice. So we can see the new structural high here will most likely not have liquidity. Then the second high here has liquidity. See? And as you can see here, this candle didn't close below and then it pushed. Don't overcomplicate it. You can just put it like this if you want. Or you can put it like this. For me, it really doesn't matter. It's the same thing. Price comes back. This is considered as a break and retest, but I prefer this one, right? Comes back, break and retest, okay? Now price pushes and stops into this decisional zone. And usually you would go when there's a reaction to this POI, right? This is exactly what I did. This, as you can see, this is the M5 candle. The M5 candle closes here, as you can see, right? M5 candle, look how it closed. So I got into the computer. I literally sat my ass on my desk and I saw that. And I saw this clear liquidity. I was like, fine. First structural push, right? This one, this is most likely also the FBOSS, because basically respecting the structural expectation, this becomes IFBOSS also, right? And we have those break and retests here. I'm just gonna remove it because it's ugly and it doesn't bring any value. Right? Structural shift, speed, and momentum. Notice that every single manipulation that either is a breakout, false reaction, FBOSS, IFBOSS always has speed and momentum. This is why I don't sleep on that indicator. I probably have more experience than all of you guys combined together, and I need this indicator. So please don't try to play like you're ego professional and use that indicator, please. Understand the candle closure. Look how this candle closes almost below this one. There's a clear POI, decisional POI reaction. When we go into the M1, the only thing we have to do is to see if there's any intention to continue into the same direction. This is not a reversal. There is not no liquidity here. So why would price take this? And also, we are not trading away from something. So this smells and this sniffs as a continuation. So what you do? Go in M1, put your alert here. Price, of course, doesn't come back for a lot of you guys, and this is completely normal. This is your relevant break of structure that you need to respect. But again, if you are up for the week, up for the day, up for the month, you can allow yourself to enter more aggressively. So this was my first trade of the day. I entered like this, okay? Targeting this liquidity. With NQ, I like targeting below just as an optimistic target. But of course, if this would happen every single time, it would be perfect, but that's not the case, okay? So that would be the best liquidity target. Now what happens, blah, 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 blah. Of course, here at the decisional POI, right? Most likely a SMT false reaction, okay? Because now they're switching the structure, providing a false reaction, most likely engineered by the relevant break of structure. So that would be FR. Oops, what have I done? Sorry, really sorry. Engineered by the false reaction here. Okay. I put it here. Okay, here. And I've taken my partials here, and price just came back into the POI again. Okay. And of course, I took this short again, right? I took this short again because I was, come on, let's go, give it to me here. And this was a partial BE. Then same thing for here. At this push came below. I took another 25% because I was trying to feed potentially, because when I was in M5, this made more sense on M5. And I was like, okay, I'm trying to feed my potential stop loss. So this got 25% off. BE. And then this is where I waited until it came back into the extreme POI, right? And also the potential inducement POI. And this is exactly what I did. It went higher, left a imbalanced POI, right? There's a reaction, candle closure below, and I took it when it came back. Okay, that was the actual real move. Now, this is where I close most of my volume here. Okay, and then I got BE'd, but of course my target was here. Okay, let's just put a line where I close. I just checked my MT4 logs, and let's put this as the most optimistic target, the M1, the M3, sorry. Now price pushes, that was super clear. Here I waited for this candle here, okay? And I remember here, I also took buys. I forgot to talk about it. So when I got BE'd here, I took buys here. Forgot. I took buys here, you guys saw it. I took it like this. I was trying now to target this liquidity here because I was like, okay, it's not ready to go. This has been waiting for like 1 hour. Let's take the buys. I took the buys when I made the new high into that extreme, started to have a reaction. I took 25% and then waited and break even got triggered. And then I switched my bias. Remember, I had the edge. At one point, I had these two positions open. This is a little bit more advanced, but I enjoy showing you guys these thought process in live, so you can see exactly how a professional trader should think and be never married about a bias, always focus about what the PA shows. Okay, so I was expecting a reaction from here, of course. So I was a little bit more flexible here in the break even because I had banked like almost 1%. It was completely stupid. It was nasty. Like I even think I missed one. I think there's another one I took here to the same direction here. But this one I closed it at full. I had to check. And it was kind of insane. Like I was just trying to boom, boom, boom. 0 losses. So that was kind of surprising. I could have at least hit one stop loss, but it is what it is. Okay. So this was officially the new low, and I was waiting for this one to close as my break even. And now this is where you go back into the M5. If you look at it, you can hide all the drawings. You see, it makes total sense. This has been protected, came back, false reaction into the inducement POI. Look at this. Boom, 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 boom. Here, mitigation, SMT. This will be shown really soon into the entries volume 2 also, how to trade the SMT. It's going to be great. Great. Coming back into the mitigation, ready to dump. Okay, so now price, let me just see, and I think I've taken some partials around here. Like I saw this was kind of dull here. It was kind of like 12 minutes, and I had to leave for the office, so that was something I was monitoring here. Price did this. Yeah, I remember it did this. And the question remains, when price does this, the main focus, let me just bar replay on one back. The main focus is, why is it reacting from here? Okay. Is there relevant liquidity? No, right? It hasn't made a new high, so there's no stress about it. They're probably just filling the imbalance, or maybe just faking to buy in that SMT zone also, because remember, they tried to buy here as an SMT. The liquidity is below, but really not significant when it comes to break and retest. So that's why I don't like it. to market because it's not going to provide any reaction. So they're just playing with this decisional zone for them, and they just continue. Okay. Now price played. Now it was here. This is where the market opens. As you can see, look how it played. That was obvious. And when price did this, I manually closed. And I was checking after I saw them faking those equal lows here. And this is always the question you should ask yourself. When you see price do this, I had maybe 5 or like, because I closed most of my volume here. I closed 25 here and 85 here. So I had maybe what, 5% ish left. So this is always a question you should ask yourself. Is it really worth it for me? Like, I could only almost bank a 1R here with the remaining. And to be honest, I had to leave for the office, so I just let it go and look the reaction. And this is where you should be able to focus entirely when it's time to trade. You saw price pushing. You saw this candle rejecting a zone. You still imagine you didn't saw to the left. And you see candle pushing, filling this imbalance kinda, and you're like, okay, what is it reacting to? You see those equal lows, that zone, this nasty PA here, and price comes back. This is kind of a false reaction of a zone. And then you have to ask yourself also, is it also potentially trading away from that maybe inducement POI, right? Are we just we know that we have a reaction based on that liquidity because that liquidity was pretty obvious, but are we having any sort of like inducement POI-ish? And that would be like the relevant breakout structure. That would be the extreme that failed. See how things get like pretty, like you can see it pretty clearly and see here that there's another false reaction here. As you can see here, there's another false reaction here that went back into this zone here. Do we have like mitigation here? Maybe a little bit higher. Just filled the imbalance, something like that. Yeah, just wanted to this imbalance here. Not even. Can't justify that really. Maybe on the M5. M5 makes more sense. Really more sense. Yeah, here we go. Okay. And you know that we're in the middle of no man's land, but we cannot predict if this is an inducement POI. So I could have just closed the remaining 5%. I just let it go for the screenshot. I'm going to be 100% transparent. I think that it looks better when price hits a TP, like the green thing. But I removed most of my volume, and this is what you should do. When price comes here, slowly, like close most of it. Keep like 5% to flex that RR. I lost instead of making a 10R, I've done a 9. Instead of making like I lost 1R. It's very good. It's very, very good. So, and as you can see, price just literally afterwards exploded, came back into that POI, as you can see here, right? God damn it. Okay. Calm down, boy. Came back into the POI and just exploded. And the PA afterwards, it's kind of a little bit more advanced. So I'm not going to get too much into it. But if you look, like, this is pretty clear what they do, like how they engineer the stop loss to go get it, coming back into that mitigation, right? Creating that relevant breakout structure, coming back again into that mitigation to explode and go get the liquidity. Look how they faking here with this FBOSS here. Look, see? And they speed and momentum perfectly take the stop loss here. Look at the false reaction of this zone, false reaction of that decisional zone, coming back here. There's your false reaction here, coming back into an inducement, a POI, right? A decisional POI, sorry. And they just leave. And when there's a false reaction, there's usually an entry in here you didn't, but you understand the idea that you cannot short from here. It's like completely, it's suicide, right? So this would become the higher time frame ish SMT that provides that false reaction to continue higher, and engineering the whole day perfectly. That was a very, very simple intention and very, very simple PA. I was targeting the shorts. The buy were more probable after all this PA, and the buy provided with more profit. But I'm the kind of guy that likes trading in the trenches. I'm like John Rambo. Like I have my AK-47 and I'm running in the forest, in the jungle, call it whatever you want. I'm ready. Like all this got my attention. I got excited. And once you get to a level where this becomes kind of a game, it's just like when you play a video game and you're trying to do trick shots, right? You're not playing stupidly. You have an edge in the game and you're just trying to have fun. And this is what I was doing. The fact is, I was Monday, so I was closing. I literally closed at 25% of all my position. 25. So I literally secured like almost 2 hours. It was insane how I was just pumping. And just because there's no commission, I was able to have perfect break evens without losing money. That would have been another story on a pair. I would probably be a little bit more diligent when it comes down to re-entering those trades if it was, let's say, AUD USD. But since it's NASDAQ, have fun. There's no problem and there's no shame about having fun and learning and trying stuff. And remember, all of those, like, let's say those false reaction entries here, when this got generated here, I knew for a fact that this was coming back into the extreme, and it was so easy. This kind of entry, like, let's say, so here, let's say here, something like that, right? See, and this is an SMT, and this is a POI, and this is your entry. These kinds of trade, this SMT false reaction, nobody showed me this. Nobody. Ask whoever you know that knows me for the past 2 years. Nobody showed me this. This is just something that I have developed by seeing it constantly. So when I'm in the trenches trying stuff like this, like when I was edging these 2 positions, eventually when I try those stuff so often, they will become a staple into the strategy, and I will be able to train you and explain you how to use it. If I don't try these experience, I'm never going to be able to get into these kinds of trades, right? This is based on my personal experience that I have built over the years. I have been in the markets sniffing and looking at this constantly. Like, I'm not joking. Like, the amount of PA I've seen live, I think I've skipped maybe 1 month of PA in the last, let's say, 4 years, and it's because I was taking holidays in total. So 1%, maybe 10%, or 1%, let's say. It doesn't matter. Like, you get the idea. It's just that to be able to create kind of entry criterias, techniques, you need to test. And I have the maturity to test it because I'm not going to panic if I hit a stop loss, right? I'm going to go back to the drawing board and test it, right? But this is why you should always focus about what I learn you That way, you're not going to lose time into trying to get involved into trades that are actually not highly confirmed. So that was a little bit longer than usual, about 30-minute video. I hope you guys enjoyed. We had the new edition of the false reaction. Let's just try and repeat what the false reaction is, right? This is actually equal lows, right? One price pushes here, okay? You see it. They will come back and they will potentially create a false reaction. False reaction of those equal lows and provide an entry opportunity, right? Because this is an enticement high. This becomes the enticement PY. And the false reaction is this. So this is FR into entry, okay? Try it, look at it, try to justify it. And it happens on every single trap. So basically, a false reaction is a trap from equal highs, equal lows, smart money trap, breakouts, break and retest. Look at it. You will notice that it happens pretty often. So that's it for my call today. I hope you guys blah, blah, blah. I hope you guys enjoyed. If there's anything, you let me know and catch you all in Discord. Peace.